Hi guys, welcome to this lecture. Today I'm going to talk about what the price action has been in January and how things have played out. So one thing that I like to do straight away is draw out the yearly open price, which is right here. And as we are in the first quarter, what I'd like to do is draw out the previous quarterly high and the previous quarterly low. So if we do that, that's my key liquidity pools drawn out in terms of the quarterly, and then I can further fractalize it and do the monthly. And again, I'll repeat the same steps. So this is the monthly low and monthly high, which is already drawn out for me. So I will draw it again. Next is obviously we can look at the weekly high and the weekly low. And if you see that within this, what we have is a displacement through, and then a retracement, and then price is stuck within this retracement leg that should have expanded higher. Why is price failing to show the same speed and volatility that we've seen in ES and YM to reach for the all-time highs? And especially this imbalance here, because this imbalance is very important. The reason why it's very important is, as you can see, if I just draw one high right there, and as you can see, they are relative equal highs that has been engineered ahead of an imbalance. Why is that important? Because if you think about it, above these highs, buy stops have been engineered, and price would also like to deliver into the sell side delivery that's inefficient of buy side delivery. So going into this month, one thing that we had is in mind that we would like to see how price reaches this level and how it reacts off this level. When we look at the economic calendar this week, immediately my eyes got drawn towards CPI day. How will they utilize CPI day? Will they use it as an expansion to take out the monthly high of December? This relative equal highs. I'm going to delete that because there's too many lines. And if we can get run up into this imbalance right here. What we've seen so far since the weekly open, we swept the weekly high, then we dropped lower, forming SMT, which we will see on the lower time frame with ES, and then we look to expand. However, price then again took out this high, and ES and YM reached its all-time highs again, and price has failed to close above the weekly high. So these SMTs, price failing to close above the previous day high, previous weekly high, not even reaching the monthly high. What does that show? That shows that Nasdaq doesn't want to go up any higher. And if it doesn't want to go up any higher, do we have draw on liquidities on the lower hand side? Well, if I was a retail trader, I'll draw this and look at this as trendline liquidity. And as we know, these are beautiful for us to target. Okay, if we go up to the weekly time frame and zoom out a little bit, we can obviously see this nice imbalance with the relative equal lows that's been forming ahead of it, this low, this low. So we have a lot of time-based sell-side liquidity that's been engineered. Okay, so let's go back down to the daily and again look into the fact that price has now twice went above the weekly opening but failed to close above it. Again, signaling to us weakness has formed within the market. So going into today, the main range to monitor and the main liquidity to monitor. The liquidity to monitor was the Monday high, and the range, the imbalances to monitor was within this SIBI, the red SIBI that I've drawn out here. One thing I'd like to add as well, when you get imbalances that are formed here, respected, and then another imbalance, another imbalance, another imbalance, and price hanging around within this area, price keeps coming back to this range, comes back to this range. One thing it shows to me already that this range that's been created here is a range where price would like to consolidate around, be range bound around it. So if that's the case, then going into CPI was very interesting. First thing we saw is yesterday, 3 p.m. created the high of the day and retraced in to the range that it created during the day. And during Asia, we consolidated, London, we consolidated, which is very nice. The reason why it's nice is because ahead of a big news driver, we anticipate this low range days, okay? And one thing is we understand that theoretically small body candles should lead to large body candles, so expansion candles after it. There was two ways that it could happen where we could break above this high, use it as support and continue higher, drawing towards the December highs and obviously the all-time highs after that. Okay. Secondly, I want you to think about is this big imbalance. If we were to displace below this big imbalance, and I want you to remember one thing is that whenever we're in a stock inside of a big imbalance, we can further anticipate range bound delivery. So everything is signaling range bound, range bound, range bound. So for me to engage in today's price action, one thing I wanted to see is if we are going to displace above the previous daily high, use their support to reach up higher, or are we going to displace below these red imbalances, use it as resistance to target this liquidity and this previous daily low. Obviously, we had SMT with these lows. So if we anticipating previous monthly high to be reached, we don't want this daily low to get taken. However, CPI opened up, pushed up higher. At that moment, whilst this candle was printing, this was one big bullish candle, okay? And price was showing that it was going to close above here. That moment of time, this is why we always wait for 1 hour after CPI release so we can see the true manipulation of the day, because at that time it didn't look like manipulation, it was looking like distribution. Immediately at the start of 9 a.m. we could see that this candle in fact closed below that high. But why was I thinking we could expand higher is because all three markets, ES, YM, and Nasdaq, all took out the previous daily high. Whenever a market, whenever all three markets take out the previous cycle high relative to the same time cycle, then I anticipate further continuation to occur in that direction. But with these SMTs, and I cannot ignore these SMTs that are forming in this high and price showing weakness, would I still be bullish in this scenario? No, because I can anticipate that unfortunately, that because we're not closing above this daily high, that I can anticipate this to be a range bound delivery if we're stuck within this range. And another clue is that not many people know, when you've highlighted a key level or a key range and the open price opens within it and price keeps coming, hovering around it and keeps going away from it, coming back to it, going away from it, coming back to it, and again on the lower side, drops lower, comes back, drops lower, comes back. It's another sign that it's a range bound delivery day, whether it's the midnight open here or whether you have a weekly open and the similar thing profile plays out on the weekly price level, where we do it up and down, back to the weekly price level, or it's a daily open where we go up and down and up and down. So in combination with these PDRAs and the opening price failing to take out that high, it's all sign of weakness that is going to come back within this range. So if I knew all of that, why didn't I participate in a sell? Well, I have very, very specific criteria when it comes to my protocol, and I'll show you exactly why I didn't take that trade, even though it was looking very, very obvious, is the fact that for one reason, I would have been very, very interested in the sells if one of the three markers swept that high. None of the markets swept that key high. Why is it a key high? Well, it formed within the news cycle. Whenever there's a news cycle, I look at the highs and lows as a very, very important key liquidity pause. Even days after. Okay, that's a key gem for you guys right there. So if we opened up at 9:30 and one of the markets swept that high, formed the time cycle SMT, look, I had 9:30 to target. I had the midnight open to target. And I also know that in a range bound delivery, it would keep coming back within this SIBI that we highlighted. And that would have been a nice trade for me. But because that didn't happen, and long as that didn't happen, I wasn't interested in the markets. Especially now, if you think about it, me anticipating that the range bound delivery is going to take place. After that, if we broke above it, this would have been my A, this would have been my B. We displaced below it, this would have been my A, and this would have been my B. None of my A's were active. So therefore, why will I push it in a low probability according to my protocol when I didn't get the right SMTs with the new cycle highs? Why would I want to participate in that? And that's one thing that I want you guys to know, is that there's opportunities and there's sometimes you know exactly what's going to happen. You know exactly what the market's going to do, but you're just not interested. The reason why you're not interested is because when we're algorithmic traders, right? So when I can be in sync and price is doing exactly like I anticipate, then I know that it's a very algorithmic day. That's when I can anticipate low resistance liquidity to occur. I know that my A hit it, active, ready, let's go, right time, SMT, CSD, take the trade, anticipate B to be reached. Not only do I anticipate B to be reached, but I anticipate B to be reached very, very fast. That's it for today. Thank you guys for listening, and I will be doing more of these reviews frequently. So please subscribe and come back to the channel, and I'll talk to you guys soon.